California single-member LLCs face unique tax obligations that differ from federal requirements. Understanding these filing requirements is essential to avoid penalties and maintain good standing with state authorities. A single-member LLC in California occupies an interesting position in the tax world. While the federal government treats it as a disregarded entity, California imposes its own distinct filing and tax obligations. This means that even though your business might pass through all profits and losses to you personally for federal purposes, you still have specific state-level responsibilities. All California LLCs must pay an $800 annual franchise tax using Form 3522. This payment is mandatory regardless of whether your business generated any income or conducted any activities during the tax year. The payment is due by the 15th day of the fourth month of your tax year. Beyond the base franchise tax, if your single-member LLC earns over $250,000 in total income, you must also pay an additional LLC fee. This fee is calculated on a sliding scale and can reach up to $11,590 for high-earning businesses. You'll report and pay this using Form 3536. Every single-member LLC in California must file Form 568, the Limited Liability Company Return of Income. This filing requirement applies even if your business generated no income during the tax year. The only exception is if you've elected to be taxed as a corporation. For federal tax purposes, a single-member LLC is automatically treated as a disregarded entity. This means you report all business income and expenses on Schedule C of your personal tax return. However, you have options. You can elect to be taxed as a C corporation by filing IRS Form 8832, or as an S corporation using Form 2553 if you meet eligibility requirements. Many business owners mistakenly believe that an inactive LLC is exempt from California taxes. This is not the case. The $800 franchise tax continues to accrue annually until you formally dissolve your LLC by filing Form LLC 4/7 with the Secretary of State. Simply abandoning your business without proper dissolution can lead to mounting tax liabilities and penalties. Other obligations for California single-member LLCs may include sales tax registration if you sell tangible goods, employment tax registration if you have employees, and filing a statement of information using Form LLC 12 within 90 days of formation and every 2 years thereafter. California LLC tax returns are typically due on the 15th day of the third month of your tax year. Missing deadlines can result in penalties and potentially the suspension of your LLC's rights to do business in the state. To maintain good standing with California tax authorities, ensure you understand all filing requirements, meet all deadlines, and properly dissolve your LLC if you cease operations. Consulting with a tax professional familiar with California business taxes can help navigate these complex requirements and potentially identify strategies to minimize your tax burden while remaining compliant.